This channel is for educational purposes only. Make sure you do your own due diligence before making any investments. And there is inherent risk in trading, so it's speculative. Just make sure you keep that in mind.
Hi, this is Joe. We're going to talk about the market, get into the market conditions right away, and then talk about the S&P momentum as well as trend and then also go into the QQQ. And then I want to bring up a specific chart that I think would be helpful for you guys to understand how to look at things in multiple time frames. So we're going to do all that here and try and get it done in 10 minutes. So let's get going. Trend hasn't really changed a whole lot. I'm going to get into that in a minute. The volatility. So even though we've seen some movement taking place, just look at if you look over here and you see this average true range, this red line, it has dropped down underneath the moving average. So the moving average is still rising. So it's below a rising, but I would consider it now more neutral. So it's another one of these situations where we've kind of not been able to hold the MA of the volatility or the average true range. And so still, I think, in a questionable position. And as I've said, we're making higher highs and higher lows in volatility. So the volatility levels are higher, which means risk levels are higher. So just want to keep that in mind. Overbought, oversold is still lingering around 60. Not a big change there this week. Sentiment jumped up again. So even though we've been getting some kind of questionable price action and some distribution, some selling in certain days, we really haven't seen. In fact, we saw another jump in the bulls this week and a little bit closer to the 40% level, which again is a much more dangerous condition for the market. So again, I'm kind of viewing this as at 38%. I'm viewing the difference. So that's the difference between the bulls and the bears based on this survey from Investors Intelligence. And I would tell you that it does bother me a little bit. I think it provides a little bit of a headwind. So that's sort of the update on the background there, market conditions. Let's go into the charts themselves. No change in the monthly this week. The weekly chart has come down and tested 3,700, and now the 18-week is actually up at 3,800. But what I mentioned last week, we made a new high, and then we're unable to follow through, and then close down for the week. And we had a little bit of downside follow through, but I still think 3,700 is the key. We can fiddle around and do like a whole lot of nothing right now, consolidating. As long as we stay above 3,700, I would still consider the overall position of the market to be okay because you're above a rising 18, which is above a rising 40. If we break these lows at 3,700, you're going to be well below the 18-week, and that line is going to start rolling. So that would be a concern. And now, if we look at the daily chart, we've gotten ourselves in a position where these lines are basically flat. We've come down to this area that I mentioned last week. We haven't convincingly broken these lines, but we also didn't bounce off them. So it's in somewhat of a neutral position right now with no momentum really in either direction. I don't see any strength in either direction. So that leaves us with this kind of bouncing around, and it goes back to this hourly chart. And what we've been talking about is, so we broke the trend line here and then made a new high here. So we're making higher highs and higher lows. And then this chart moved up, broke the trend line, tested the high. And then when it came down through this line, the trend was down. And now we have not changed the trend back to the upside. In fact, we have created a downtrend. And so, the question is, are we getting ready to drop down and really put pressure on the daily moving averages and break through the daily moving averages and even put pressure on the weekly moving averages? This index doesn't have the same kind of momentum condition that the QQQ, which I'm going to show you in a minute. But right now we are in a bearish condition on the hourly chart, and we just have to see if it wants to keep going. If we come up through this trend line, I don't know that that necessarily means we're going to get up and going straight away to the upside, but it's going to weaken the case for the downside, the bearish action to the downside. So pretty important how we play out here over the next day or two. We'll have to see how that takes place. Now, one thing I want to show you before we get into the cues, I've created a chart here that I wanted to explain to you, because on Omni Broker, my other program that I use for charting, it allows me to put the 18-week and the 18-month line and overlay them onto a daily chart. And I've mentioned this a lot over time, but what this is TradingView. It doesn't allow you to do that multiple time frame work, but what it will allow you to do is overlay simple moving averages. So what I've done here is I've done the math for you. And if you take a daily chart, and this line here is a purple, this is an 18 MA. And if you divide by 5, that would give you the smaller time frame, the one time frame down, which would be the hourly for me. And that'll give you a 4. I put a 4 MA on the hourly chart, and that's what this gray line is, this little gray line. So that gray line is telling you what the 18, approximately, it's not an exact, but approximately what the 18 on the hourly is doing. So I can see when it gets overbought and starts to cup around, then we're probably going to work our way down. You can see that happen over time, and it's just nice to have that. And then I've also taken a 90 MA, and what that is 18 times 5, which would be the weekly line. So this 90 MA is this basically the same as an 18-week MA, this blue line. And then taking that one more time frame higher, a 450 MA is going to give us approximately an 18-month moving average. So if you were to put this on your charting software and put in a 4 MA, you have the hourly 18, and then put in a 90, and you have the weekly 18, and then put a 450, and you have the monthly 18. Now, it's not exact. I mean, if you look at the 18, it's a little 18 month, it's a little bit higher, but it gives us a really good feel for what's taking place here and how we keep putting pressure on the 18-week, but it's still rising and holding. And if we were to break that, you can see the distance that we've got. We've got a lot of air between the 18-week and the 18-month. And I think it's a nice way of looking at things and showing you where your risk is if certain levels aren't broken. Every time we break the 18-day, we know we have support from the 18-week. At least we have so far. The one time that changes, we got to start thinking lower prices. So I thought this was kind of neat to be able to look at it this way. Just do the math. If you want to use a 20, you can do the same thing. Just use the same math, and you'll get your moving averages that you can apply. Let's go back to this chart, switch back to our 4 time frames, and let's look at the QQQ. So as I mentioned last week, when we go to the weekly chart, what happened here is the S&P went all the way up to a new high, and this index couldn't even really test the high. It made a lower high by a significant margin, about a 50% retracement. Momentum is still, both MACD lines are still declining. The ADX is dropping. There's really no strength in the buyers right now. It looks like it wants to continue to consolidate. 300 is a big number. If we break 300, then I think we have to be ready for something a lot more significant in terms of downside risk. But most importantly, I think you guys need to understand, if we go back and let's just look at the daily chart. I mean, through this whole period, I'll just circle this, basically from here all the way up to here, I was pretty bullish. There really wasn't any tune of talking about putting puts on or buying, selling or volatility exposure or anything like that. It was really when I started to see this action in the ADX that we've gotten into a period where the conditions aren't so great. So you have to be more defensive or more cautious about doing new buying until we get a more stable environment. And I don't know. I mean, maybe this wants to drop down and really create some downside to it. I mean, it's still it's still showing some weak signs. The ADX does not look all that great. MACD has not been able to recover the zero line. So I think, the odds of downside testing, I think, are still out there. And I think you have to just keep that in mind when you're thinking about putting something new on, if you're thinking of putting a new trade on or something like that. If we go and look at the hourly chart, same thing took place. We had the uptrend and then we broke that and we've been in a downtrend. I would be drawing in a downtrend line here. We have a little bit of room to rally underneath that, but I think there's a pretty good chance this thing wants to come down and test 300. We just have to see how strong 300 is. The one thing I would point out, again, we know we have bearish ADX on the daily, but we have signs for the first time in a little bit. We've also got signs where the ADX is pretty negative on the hourly. So if this rally doesn't recover in any real strong way and red DI stays above 25, I think you have to expect more downside risk in the near term. So please hit the like button for me. And if you have any questions or comments, please post them. Thank you.